Hi everyone, Ron Milligan with Remax Select here. One of the big questions I get asked by both buyers and sellers is what's coming down the line? What can we expect in 2022 and maybe even a little bit beyond that as far as especially home prices and interest rates go? I don't have the answer to that. I talk a lot about what is and what just happened and where we think it might be going and what is sort of indicated in what we're seeing in the numbers. But I tend to leave sort of the bigger long-term stuff, the national stuff, to the big experts. So what I do have for you today are some predictions from some of the biggest players in the real estate sphere for home prices and for interest rates. So the first thing that we're going to look at right now is a map of the United States, and this map shows for Q3. So this is up to the third quarter of last year. The amount of equity that was the average increase in each state. So if you look at this map, you can see, California at 119,000 increase in equity in that 12-month period. Washington at 96,000 and Oregon at 66, Idaho at 82, Arizona at 92. So that's what was, and we know that according to RMLS statistics for the sales that took place on RMLS in 2021, that we ended the year comparing all of 2020 to all of 2021 at 15.8% increase in the average sale price. So that's the year over year. Going forward into 2022, we've already started off the year with a bang. Prices, we still don't have enough data to kind of say where we're headed as far as the average sale price goes. But what we do have are some forecasts from, like I said, the biggest players in the game. So if you look at this graph right here, you can see that we've got NAR and Ivy Zelman. And Ivy Zelman is someone that I follow very closely and tend to pay a lot of attention to. NAR, National Association of Realtors, at the bottom of the graph here with 2.8 and 3% year over year for 2022. So comparing 2022 to 2021, we're going to at the end the year at 2.8 or 3% appreciation from those two sources. MBA, the Mortgage Brokers Association, and HPES, which is the Home Price Expectation Survey, and that's a survey of like 100 plus of the leading economists in that field. They both came in at around 5.1%. CoreLogic is another big player in real estate analytics, and they're in at 6%, Freddie Mac at 6.2, Fannie Mae at 7.6, and then an average of all of these forecasts is around 5.1. So I got these numbers from a group called Keeping Current Matters that assembles this information for agents. And one of the things that they've been noting is that all of these folks, these numbers were actually from last month, they're January numbers, and didn't take into account that interest rates might be on the rise, and also maybe didn't take into account the incredibly low inventory that we've been experiencing and how that's having an effect on the market right now. As you know, in Oregon, we're somewhere between 22 to 26% below. Like last week, we were 22% below the previous year for the number of active listings. So significant lack of inventory is having an effect on our market. But what they were saying with KCM, Keeping Current Matters, is that a lot of these groups that made these predictions are starting to adjust their numbers and soften on sort of the more austere stances that we're seeing with these predictions here. So we'll see what happens. I'm guessing by mid-March, once the Fed increases the rates. The Fed's promised to increase rates in March to their first of the three increases in interest rates. I suspect that we're going to start seeing the seeds of what's coming down the line, and then after that we'll see how interest rates are going to balance with the lack of inventory and whether or not we actually get more inventory. So these are the numbers that we have right now. Do take note, no one's talking about a crash, no one's talking about depreciation. just not as much appreciation as we've experienced in 2020 and 2021. So the next one I want you to look at here is the interest rate projections, the mortgage rate projections for the bigger players in the game here again. So if you look on the left side, we're talking about Q3 or Q2, Q3, Q4 of 2022, and then a prediction into Q1 of 2023. You can see Freddie Mac, Fannie Mae, Mortgage Brokers Association, NAR, and then an average of the four big players there. We're looking at, in Q2, 3.5% roughly, just above 3.5%. In Q3, Q4, 3.75, and then in the first quarter of next year, probably rates at 3.82%. Again, these are very preliminary. It's hard to say how this is going to play out, but the Fed has, with the strongest language that we've heard in a very long time, said, yes, we're absolutely raising rates. We're going to do it 3 times. We're going to start in March. So do expect rates to go up. To put this into context, I wanted to show this last slide here, which is current mortgage rates compared to the last 5 decades. Just for an example of gosh, what if rates do get up to 3.75 or 4% or something like that? Where have rates historically been? During the 2010s, they were somewhere around 4%. The 2000s, 6.25. I remember buying a house at 6.25. 1990s at 8.12. 80s at 12.7. Remember, we started off the 80s with extremely high interest rates. In the 1970s, an 8.86. So, the numbers aren't horrific. They will probably have a tempering effect on buyers' buying power. So the higher the rates go, the more it decreases the buyers' the amount that they can qualify for. So I suspect that will have a slowing effect on the rate of appreciation, kind of like what we saw with those predictions regarding the year-over-year appreciation. So that's what we've got for right now. As we get more information and we get more statistics rolling in that might speak to something else, I will absolutely update you here. All right, talk to you soon.